Welcome to our channel, your trusted news aggregator bringing you the most important stories from around the world in one place. We save you time by gathering verified information from multiple sources so you stay informed without the hassle. If you find value in what we do, please hit that like button and subscribe to never miss an update. The global financial system is trembling today. Markets across continents are sliding as geopolitical tensions reach a boiling point. What started as trade disagreements has escalated into something far more threatening. Investors are fleeing to safety. The question everyone is asking is simple but terrifying. How bad will this get? President Trump arrived in Davos, Switzerland this morning, with the financial world watching his every move. His threats against European allies over Greenland have sent shockwaves through trading floors worldwide. 8 European nations now face tariffs that could reshape the global economy. Denmark, Norway, Sweden, France, Germany, the United Kingdom, the Netherlands, and Finland are all in the crosshairs. The tariffs begin February 1st at 10% on all goods. But here is where it gets darker. If no deal is reached by June 1st, those tariffs jump to 25%. Trump posted on social media that Greenland is imperative for national and world security. European leaders are calling it blackmail. The divide between allies has never been wider. Don't forget to subscribe and turn on notifications so you never miss critical updates like this. Hit that like button if you want to stay informed. Markets responded with brutal efficiency. The S&P 500 experienced its steepest drop since October. The tech-heavy Nasdaq led the losses as implied volatility surged. The VIX, often called the fear index, climbed higher as panic spread through trading desks. Asian markets fell 0.7%. European stock futures suggested a flat opening, but the damage was already done. The dollar, typically seen as a safe haven, weakened against the euro. Investors sought refuge in the Swiss franc instead. Bitcoin, often viewed as a proxy for risk appetite, fell sharply against the dollar. Gold surged to fresh intraday highs as traders scrambled for traditional safe havens. Brent crude oil edged higher in an increasingly volatile commodities market. But the real story is happening in the bond markets. Japanese bonds rebounded after a sharp sell-off that reverberated across global debt markets. Japan's 40-year bond yields fell 22 basis points after Finance Minister Katayama called for calm. Long-term sovereign yields in Europe and America climbed, steepening curves. The move was driven by contagion from Japan after Prime Minister announced an expansionary fiscal plan ahead of February 8th elections. This raises deficit concerns at the worst possible time. US Treasuries posted modest gains, but the calm is deceiving. S&P 500 futures rose just 0.3%, hinting at recovery, but analysts warn this could be the eye of the storm. European Commission President Ursula von der Leyen stood firm. She declared Greenland's sovereignty as non-negotiable. She warned that the threatened tariffs risk a dangerous downward spiral in transatlantic relations. Europe, she said, will remain united, coordinated, and committed to upholding its sovereignty. Her words were measured, but the message was clear. Europe will not be intimidated. French President Emmanuel Macron, wearing sunglasses to protect a burst blood vessel in his eye, spoke at Davos with unusual force. He criticized what he called imperial ambitions. He warned of a shift toward a world without rules where international law is trampled underfoot. Macron said additional tariffs on opponents are crazy. He pushed for the European Union to activate its anti-coercion instrument, also known as the trade bazooka. Make sure you're subscribed because this situation is developing rapidly and you'll want the latest updates as they happen. Hit that like button to support our work. The trade bazooka is a powerful legal mechanism adopted by the EU in 2023. It was designed to protect European countries from economic pressure by non-EU nations. Ironically, it was created with China in mind, not America. But French leaders are now requesting its activation against the United States. The EU is also considering imposing €93 billion of previously announced retaliatory tariffs that were delayed last summer. UK Prime Minister Keir Starmer said applying tariffs on allies for pursuing collective security of NATO allies is completely wrong. He insisted Greenland is part of the Kingdom of Denmark and its future is a matter for Greenlanders and Danes. Canada's Mark Carney went further. He argued the rules-based international order is effectively dead. Washington's desire to seize Greenland, he said, is proof. Danish Prime Minister Mette Frederiksen addressed her parliament with a somber warning. The worst may still be ahead of us, she said. We have never sought conflict. We have consistently sought cooperation. Greenland's Prime Minister Jens Frederik Nielsen insisted in Nuuk that international law is not a game. He called for respect for territorial integrity and thanked EU allies for their support. US Treasury Secretary Scott Bessent tried to calm fears at Davos. He urged European leaders to take a deep breath and not retaliate. Do not retaliate, he repeated twice in his interview with Fox Business. He described US-European relations as never closer. But his words rang hollow as markets continued their descent. Behind the political theater lies economic devastation. Germany alone traded $236 billion worth of goods with the United States in 2024. The United Kingdom traded $147.7 billion. The Netherlands $122.7 billion. Machinery, pharmaceuticals, organic chemicals, and automobiles dominate these trade flows. Subscribe now and hit the bell icon to get instant notifications when major market moves happen. Your financial future depends on staying informed. Europe's pharmaceutical sector faces catastrophic exposure. Medicines and pharma products represent the EU's largest export to America. EU pharmaceutical exports to the US reached €84.4 billion in the first 3 quarters of last year. Denmark's Novo Nordisk shares fell 2.1%. Switzerland's Roche dipped 0.3%. France's Sanofi dropped 0.9%. The automotive industry is equally vulnerable. German chemicals, industrials, and auto sectors will be most impacted. This directly threatens German economic growth, which expanded just 0.2% in 2025, after 3 years of contraction. Germany's trade surplus tumbled to €110 billion from €241 billion in 2024. It is one of the smallest surpluses in more than 2 decades. European luxury stocks, previously sheltered by pricing power, now face spillover effects. Analysts warn that a broader economic downturn could impact even the wealthiest shoppers. The prospect of tariffs ushering in recession changes everything. No sector is immune when confidence collapses. Denmark took symbolic action. Akademiker pensjon tenchoperate sold $100 million in US Treasuries. Anders Shelding Vinchiv Sporo's government finance. Treasury Secretary Bessent brushed it off as irrelevant. It's less than 100 million, he said. They've been selling treasuries for years, but the message was sent. Make sure to like this video and subscribe. We're tracking every development in this crisis and bringing you facts you can trust. Trade agreements are unraveling. The EU implemented a trade framework with the Trump administration last summer, but has not signed the accord. German Chancellor Friedrich Merz supported it because it avoided significant tariff escalation. But many European leaders decried the agreement when announced. Trump's latest threats put the deal in serious doubt. European Parliament's Manfred Weber said on social media that given Trump's threats regarding Greenland, approval is not possible at this stage for a EU-SEU trade agreement. Steven Durlauf Aprofa Univos Harris Shukab Public Policy said these actions represent an end of the credibility of American commitments. That will have adverse effects on the world economy, he warned. America's largest trading partners are actively strengthening relations with other nations. Canada celebrated a strategic partnership with China last week. The agreement includes easing tariffs and selling Chinese EVs. The EU announced it struck a deal with South America's Mercosur bloc, capping off 25 years of negotiations. The deal is the largest ever for the EU in terms of tariff reductions. The irony is devastating. In actions to try and acquire Greenland, America might paradoxically be driving its most important allies away. The cost of this policy is that it's actually emboldening the very enemies we're concerned about. The real cost is the factories that were never built because companies aren't certain enough. Subscribe and hit that like button. This channel is your one-stop source for aggregated news that matters. Karsten Brzezinski, global head of macro at ION, expects increased tariffs to shave a 0.25 percentage point off European GDP this year. For businesses, the developments over the weekend mean another period of uncertainty around investments in and exports to the U.S. That business uncertainty led many U.S. companies to pause hiring in 2025. Europe is still dependent on the U.S. in many ways, both economically and for security. But that dependence is becoming a liability. Ozan Shkirel, founder of Tonto Capital, warned this will impact oil prices, commodity prices, equity markets, debt markets, and private credit. Welcome to 2026, he said. This is the year we talk about what it means not to have the U.S. play ball with traditional allies. The timing could not be worse. China reported exports surged 6.6% in December, the fastest pace in 3 months. China's trade surplus hit a record $1.2 trillion in 2025. The latest data showed combined increases in exports to Southeast Asia, and Europe outweighed a tariff-driven slump in exports to America. China's manufacturing prowess and ability to withstand U.S. tariffs is clear. But it also risks inflaming tensions as Chinese exports flutrica, Latin America other markets. The global economy is fragmenting before our eyes. Alliances are shifting. Trade flows are being redirected. The post-World War II order is crumbling. Hit that subscribe button and turn on all notifications. Major news is breaking every hour, and we're here to keep you ahead of the curve. Global growth is projected at 3.3% for 2026 and 3.2% for 2027, according to the IMF. These projections were revised slightly up since October, but key downside risks remain. Reevaluation of technology expectations is one concern. Escalation of geopolitical tensions is the greater threat. The World Trade Organization's 14th Ministerial Conference will take place amid rising unilateral tariffs and geopolitical tensions. For developing countries, restoring a functioning dispute settlement system is essential to protect market access and enforce trade rules. Nearly 2/3 of global trade takes place within value chains being reshaped by geopolitical tensions, industrial policy, and new technologies. Firms are diversifying suppliers and relocating production closer to key markets to reduce risk. Countries with strong infrastructure, skills, and stable policies are better placed to attract investment. More peripheral economies risk being sidelined unless they improve logistics, skills, and the investment climate. Environmental, social, and security-driven rules will expand further this year. Critical minerals prices have fallen sharply after 2022 as supply expanded faster than demand. This eases costs for clean technologies but weakens investment in new mining projects. South-South merchandise exports rose from about $500 billion in 1995 to $6.8 trillion in 2025. Please subscribe and like this video. Your support helps us continue bringing you aggregated news from trusted sources worldwide. Today, 57% of developing country exports go to other developing markets. Asia's regional value chains lead the way. Africa and Latin America are strengthening South-South links. Deeper, interregional trade can help offset weaker demand in advanced economies and boost resilience. But the fragmentation accelerates. Trade is no longer global. It is regional, ideological, political. The world is dividing into competing blocs. America and its uncertain alliances on one side. China and the developing world on another. Europe trapped in between. Implied volatility remains elevated. The CBOE volatility index hovers around 14, suggesting market complacency despite simmering risks. This environment makes buying longer-dated VIX call options an inexpensive way to hedge portfolios against sudden return of market fear. Safe haven flows dominate financial markets. The USD dollar index trades lower around 98.5. Gold reached a record high of $4,757 per ounce amid geopolitical unrest. USD/JPY remains stable near 157.9. The Bank of Japan has begun slow policy normalization. The risk of sudden government intervention to support the yen is pronounced. Before we wrap up, make sure you've subscribed and liked this video. Share it with anyone who needs to understand what's happening to global markets right now. Markets will remain under pressure as traders navigate this dense calendar of economic and geopolitical headlines. Until greater clarity emerges, emerging market equities and currencies will suffer. Sentiment is driven more by global macro forces than country-specific fundamentals. This is no longer about individual nations. This is about the entire system. The Sell America trade has bounced back this week. U.S. stocks and bond prices have dropped as tensions escalate. Former President Trump's tariff announcement sparked reevaluation of risks following an AI-driven rally that pushed global equities to record highs. That rally now seems like a distant memory. The geopolitical spat over Greenland weighs on everything. Bitcoin fell, commodities surged, curves steepened. Fear spread. This is not a normal market correction. This is structural breakdown. The question is no longer if things will get worse. The question is how much worse and how fast. Thank you for watching. Remember, our channel exists to save you time by aggregating the most important news from verified sources around the globe. Subscribe now, hit that like button, and turn on notifications so you're always informed when markets move. The next 24 hours could change everything. Stay vigilant, stay informed. We'll see you in the next update.